welcome. Mansoor Sharif here with another important international accounting standard. In today's video, we will be discussing IFRS 16 lease. IFRS 16 is the accounting standard that explains how companies should record their lease arrangements in their financial statements. Before IFRS 16, many leases were not shown properly on the balance sheet, which meant assets and liabilities were hidden. IFRS 16 fixes this issue by requiring most leases to be recognized on the balance sheet. This standard mainly affects lessees and has a direct impact on assets, liabilities, profit, and financial ratios. Before going into the much detail of this IFRS, let's talk about what is a lease. A lease simply means using something that we do not own in exchange for payment. For example, when we rent a house or a car, we use the assets and pay money, but the asset does not belong to us. IFRS 16 is based on this real life idea. Even if we do not own the assets legally, our right to use the asset and our obligation to pay for it must be shown in the accounts. Next, we have why we care about these leases. We care about these leases because leasing creates long-term payments commitment. Companies leases offices, vehicles, machineries, and equipment. Under old rules, companies treated lease payments like normal rent expense, which meant large future payment obligations were hidden. This made companies more financially stronger than they really were. IFRS 16 has introduced to show the true financial position of that company. Next, we have two important things, two very important elements in lease accounting under IFRS 16. The first is the right of use asset, which represent the company's right to use the leased asset. The second is the lease liability, which represent the obligation to make future lease payment. Every lease creates both an asset and a liability. In today's topic, in this standard, we will try to cover the purpose, scope, recognition, measurement, presentation, disclosure, and exam focus in this video. IFRS 16 brought a major change by standardizing lease accounting and removing off-balance sheet treatment for lessees. Next, we will look into why this lease accounting matters. Lease accounting matters because leases create long-term financial commitment. Under IAS 17, operating lease were kept off the balance sheet, which mislead user to financial statements. IFRS 16 improves this transparency by ensuring that lease obligations are properly reported. It is applicable for all period on or after 1st January 19. IAS 17 releases no longer applies. Let's try to define IFRS 16. IFRS 16 define a lease based on the control. If a company controls the use of an identified asset for a period of time in exchange for consideration, then the contract contains a lease. Control means that the company gets the economic benefits and decide how the asset is used. The objective is to specify the principles for recognition, measurement, presentation, and disclosure of leases. Next, we have IFRS 16 scope. IFRS 16 applies to lease of identified assets such as a property, building, vehicles, machineries, and equipments. If the asset is clearly identified and the company control its use, IFRS 16 applies to these. Next we have what are the things which are outside the scope of IFRS 16. IFRS 16 does not apply to short-term leases, leases of low-value assets, and leases of intangible assets. These exemptions are allowed to reduce cost and complexity. In exams, mostly these exemptions are easy score areas for students. The core principle of IFRS 16 is very simple. If control exists, the lease must be recognized on the balance sheet. This means recognizing a right of use asset and a lease liability, even though the company does not legally own the asset. When we look at this example here at the inception, assesses whether the contract is or contain here the lessor and the lessee. The right to control the use of asset, the lease asset, or the lessee should pay the consideration. This is all about the core principle of IFRS 16. Next, we have recognition criteria for lessees. At the commencement date of the lease, the lessee must recognize a right of use asset and a lease liability for almost all leases. This is a recognition rule is heavily tested in mostly in exams for ACCA students. Here at the start date of the lease contract, we have the right of use asset. Here, the amount for lease liability, lease payment before or on commencement date, lease incentives, initial direct cost, estimates of dismantling cost. These we will record under the right of use of asset. And a lease liability, in lease liability criteria, here we have fixed payments, variable payments, index, residual value, guarantees, exercise price of purchase option, penalties for terminating the contract. The payment which are not paid at the start of the contract, they will be discounted. Interest rate implicit in the lease, they are given in the lease contract, the rate, the discount rates. Next we have accounting by lessee. After the start of the contract, after the commencement date of the contract, lease contract, the right of use asset, it will be accounted as debit, profit and loss, depreciation expenses, and credited right of use asset, accumulated depreciations. What will be the lease liability? Here we will debit the profit and loss interest rate and credit the lease liability. This is the type of treatment done by the lessee. And how the lessor uh, done the accounting of this lease contract. Here we will look into that whether risk and rewards are transferred to lessee. If risk and reward are transferred to the lessee, it will be a finance lease. If not, it will be treated as an operating lease. If yes, the finance lease, here the situation is ownership transferred, option to purchase the asset at a price, lease term, major part of the economic life of the asset has been transferred to the lessee, present value of lease payment, which is close to the fair value, leased assets are of specialized nature. Here in operating lease, the lease payment is straightly uh, done by straight line basis through depreciation, and we will keep recognizing the asset in our books. It will be the accounting treatment by the lessor. Next, we have the measurement criteria. Measurement is one of the most important and tested areas. The lease liability is measured at the present value of future lease payment. Present value is used because money paid in the future is worth less than money today we have. The right of use asset is generally measured at the same amount as the lease liability with certain adjustment. Next we have lease accounting model. IFRS 16 lease accounting model follow a clear sequence. First, identify the lease. Second, determine the lease payment. Thirdly, select the appropriate discount rates. Fourth, calculate the present value. Finally, recognize the right of use asset and lease liability. This order is very important for students who are preparing for the exams. Next, we have presentation and disclosure of IFRS 16. In the financial statements, the right of use asset is shown under non-current assets, while the lease liability is shown under the liabilities split into current and non-current portion. IFRS 16 also requires detailed disclosure in the notes to the financial statements. Next, we will try to understand IFRS 16 through a short example. Here we have a 3-year lease agreement with annual payment of 10,000 at this point. We will try to understand this example here in our Excel file. Here we try to understand how to calculate the present value of the lease payment step by step wise. Here we have the lease payment of 10,000 payable at the end of years for 3 consecutive years. Then we will apply here the discount rate which is given to us as 8%. Each payment is discounted separately using present value factors. This is the formula to calculate the present value factor from factors. This is the amount 25,770 which we will get at the end of the 3-year lease agreement. We will get this figure by multiplying the discount rate of 8% with the annual payment of 10,000. 25,770 we will get this figure, and this amount represents the lease liability at the commencement of the lease contract. Based on the calculation in the Excel file, we now record the journal entry. We debit the right of use asset with 25,770 and credit the lease liability 25,770. This entry shows both the right to use the asset and the obligation to make the future lease payment. Next, we have the important slide. We have the exam focus for the students who are preparing for the exams. Examiner frequently test this common mistakes such as ignoring lease recognition, using the wrong discount rates, and applying old IAS 17 logic. Remember the golden rule here in IFRS 16, its control is more important than the ownership. What are the common traps student faces? Ignoring the lease recognition, student make this mistake, treating a lease like a normal rental expense, recording rent expense only. The next challenge a student faces in the exam is wrong discount rate they select. Students were using bank interest rate or using company's average borrowing rate or using random percentage given in the questions. What are the tips here for the students who are preparing for the exam? If exam gives a rate, you must use it. If no rate, state assumptions clearly. Next we have the last slide we have how to recap IFRS 16. It brings most leases into the balance sheet. Every lease creates a right of use asset and a lease liability. Lease liabilities are measured at the present value of lease payment, and IFRS 16 improves the transparency and comparability in financial reporting. This is all from my side regarding IFRS 16. Thank you for watching.